Welcome to The Explainer. So, how does a company that once stood for the absolute pinnacle of engineering, a real symbol of American innovation, find itself in what feels like a constant state of crisis? Today, we're really digging into the story behind Boeing's engineering decay. This question right here gets to the absolute heart of the matter. This is the central conflict that sits underneath Boeing's dramatic and, sadly, at times fatal, fall from grace. To really get a handle on what's happening today, the door plugs, the groundings, all the investigations, we've got to go back in time. We need to see the incredible contrast between the company Boeing once was and what it's become. Okay, so what you're looking at here is basically two completely different companies wearing the same name. On one side, you have old Boeing, a company run by engineers, obsessed with safety and defined by legendary achievements like the 747 and its team of Incredibles. And on the other side, you have new Boeing, driven by finance, focused on shareholder value, and ultimately defined by crisis after crisis. Just think about that for a second. The engineers, the folks who actually build the planes, they had the final say. Safety and technical excellence weren't just talking points on a memo. They were the absolute soul of the company. But then, one single corporate event happened that would fundamentally change everything. Permanently. All right, so what was it? What was that one moment where it all changed? Let's nail down exactly when the power inside Boeing shifted for good, kicking off all the problems we're still seeing play out today. In 1997, Boeing acquired its rival, McDonald Douglas. Now, on paper, it sounds like Boeing won, right? But what was really going on inside the company? Well, that's a totally different story. There's this saying that McDonnell Douglas actually bought Boeing with Boeing's own money. This wasn't just a merger, it was a total cultural takeover. And this is the absolute key takeaway here. The new leadership that came over from McDonnell Douglas brought with them a really ruthless obsession with the bottom line. So all of a sudden, you have this huge clash. The engineers, who are obsessed with perfection, are now butting heads with this new management team that only cares about one thing: cutting costs to make the next quarterly report look good. Right, so this new way of thinking wasn't just some abstract idea. Oh no, it came with a very specific, very real playbook, and its whole goal was to squeeze out as much short-term cash as possible for Wall Street, even if it meant sacrificing long-term investment and innovation. Okay, just look at this number. It's staggering. Over $40 billion. And get this. This was between 2013 and 2019, right when the 737 MAX was being developed. And where did that money go? Not into R&D, not into new planes. It went into buying back their own stock, just to pump up the share price for investors. This just lays it all out, doesn't it? The company's new priorities were crystal clear. Rewarding shareholders took precedence over actually investing in the future. The cash that could have gone into designing a totally new, state-of-the-art airplane from scratch, nope, it was siphoned off to Wall Street instead. And it didn't stop with stock buybacks. You had critical parts, even software for the MAX, being outsourced to whoever would do it cheapest. Then they moved the corporate HQ all the way from Seattle to Chicago. This wasn't just a change of address. It created this huge gap, both physically and culturally, between the suits in the boardroom and the actual engineers and mechanics on the factory floor. These weren't just simple cost-cutting moves. These were decisions that systematically broke down years of built-up knowledge and safety oversight. So once you have this culture where cutting costs and pleasing shareholders is everything, well, a disaster like the 737 MAX wasn't just a possibility anymore. It was, tragically, almost inevitable. The whole MCAS story is just a textbook example of this broken culture in action. To keep up with Airbus, Boeing rushed a new version of the 737, but there was an aerodynamic problem, so they patched it with a powerful piece of software called MCAS. Then, and this is key, to save their airline customers money on pilot training, they deliberately downplayed how powerful that software was. The result? 2 horrible crashes and 346 people lost their lives. But here's the thing. MCAS was just the symptom, not the disease. The real problem was so much deeper. We're talking about a culture where whistleblowers were intimidated into silence. The FAA, the regulator, actually handed over its safety oversight to Boeing. What a massive conflict of interest, right? And as the veteran engineers left, that priceless shop floor wisdom, the kind of knowledge you can't write down in a manual, it just vanished. And that led to really basic, frankly embarrassing mistakes, like loose bolts and doors flying off midair. So after decades of putting profits ahead of the product, the bill has finally come due. And it's a massive one that goes way beyond just money. It hits at the very heart of what the company is. And you can see the damage right here. Look at the market share. Back in 2018, Boeing was on top, with 55% of the market compared to Airbus. But fast forward to 2025, it's projected to totally flip. Airbus is on track to grab 60% of the market. Why? Because airlines and the flying public have lost faith, and of course, Airbus is there to pick up the pieces. So what's happened since is a total top-to-bottom reckoning. Trust? It's just shattered. The regulators have had to step in with some of the strictest oversight we've ever seen. And now, the company is being literally forced by mandate to go back to the very engineering first principles it spent the last 2 decades throwing away. You know, the story of Boeing isn't really just about airplanes. It's a huge, tragic lesson that leaves us with this one critical question. In industries where people's lives are literally on the line, is a strategy that only cares about the next quarterly report, not just bad business. Is it a terminal diagnosis?